Hi, Kelly Eckhold here, Westpac Chief Economist. I'm here to give you an update on the economic outlook in light of the release of our own economic outlook forecast last week, but also the Treasury and the Reserve Bank's update from the budget and the monetary policy statement, which have all come out in the last week or so. I'm pleased to report that all agencies and ourselves seem to agree that the prospects for recession have reduced in the last few months. The big issue there is that there's this big increase in immigration that's filtering through into the economy, which looks set to boost population growth to around 2.5%, which would be one of the highest levels of population growth that New Zealand's seen since 1961. The impact of that means that whilst we still impact that economic growth is going to decelerate and grow at a below trend level over the course of the next year or two, we're not likely to slip into that recession, and the unemployment rate won't have to go quite as high as what was feared a few months ago. So what does this mean for interest rates? Well, that's where there are an increased range of views between, say, the markets, Westpac, and the Reserve Bank. Yesterday, the Reserve Bank told us that they thought that this last 25 basis point increase to 5.5% would be the last one, and that they would be able to hold interest rates at that level of 5.5% until the second half of next year, when inflation would be significantly lower and falling, and that they would begin to cut rates. For our part, we're not so sure that that will be the case, and we still expect at least one more interest rate increase. And the reason for that is that we think that the impacts of immigration on the economy and the housing market are likely to be a little bit larger than the Reserve Bank thinks, and as a result, the fall of inflation may just be delayed a bit relative to what they're assuming. We're going to see what happens as we look through the data in the next few months about the immigration cycle and the associated effects to be able to get a better fix on exactly how that will be. So the question then is, well, how does this impact on our customers? And the answer to that is it depends on which type of customer you are. For households and consumers, the reality is it's still going to be doing it a bit tough. Growth is decelerating, the unemployment rate will be rising a bit, and interest rates will remain high and will still be passing through the past interest rate increases into householders' payments through the fact that fixed mortgage rates are rolling off and people will be going on to lower interest rates to higher ones over the course of the next year. So that's going to crimp budgets a bit and have an impact on household spending. But, you know, for businesses, things are a little bit better. For a start off, the extra immigrants mean that businesses are going to be able to get more staff more easily. That's going to allow them to do more, and potentially they won't have to pay quite as much for staff as they might have had to in the past. And the generally more robust economic environment will mean that they'll have more business opportunities, which I'm sure will be very welcome to them. For agricultural customers, we also anticipate that next year will be a better year. They had a bit of a tough year last year because cost inflation was quite high, and that really crimped profitability. For the coming year, because inflation is coming down so much, we anticipate that their costs will fall by quite a considerable amount, such that profitability should substantially improve, and that will be a really welcome benefit for them. The other thing that supports their outlook more generally is that while global growth is set to remain relatively muted, outlook in China looks relatively robust, and China is an important export destination. A less positive spot is in the horticultural sector, which was badly affected by the cyclone a couple of months ago, and they're going to spend the next year really having to recover from that, which will be a little bit less positive for them. I'll talk to you again next time.